Hi everyone, and welcome along to another episode of Meet Your Trading Experts for Free. My name is Paul Bottrell and I am your host, and thanks a lot for coming along and joining us today. It's a great pleasure to present the show and to have you guys along. I've been really looking forward to the show all week. My guest is one of my favorite guests on all trading things I do. I met Lloyd maybe 5-6 years ago now when he attended one of our trading courses. He came in as a guy who was working as a videographer, and he's been through one of those great trading journeys. I think he's had some great moments and some tough moments, and it's turned him into a hi Lloyd. It's turned him into a magnificent trader and a full-time trader investor now, working from home, and a man who, for mine, is really good at the skills of trading. And I just think sometimes, and you'll notice in the show, we've been talking about the skills of trading on and on recently. I think it's crucially important. I think it's really important. And I really encourage you guys to listen carefully to Lloyd today and to get all the information you can out of this session and to use it to become a better trader. Look, we talk about this in the session that we do, the first ever sharing session, that knowledge with action is power. Knowledge without action is waste. Take the knowledge that you take from Lloyd today and put it to good use. Look, I've missed the market analysis webinar I've been doing for the last few weeks. I've missed it for the last couple of days. It's been a little bit hectic back in New Zealand. So I'm going to start the show with a quick run around some markets and talk about some stuff that I find interesting. After that, we're going to talk to Lloyd, who's going to talk about back testing. Look, here's the thing. Here's what I could do in this conversation right now. I could ask the people who are watching on YouTube, the people who are watching on Facebook, the people in the room, I could ask them how many of them back test their stuff regularly, at least quarterly, potentially monthly. And here's the thing. Profitable traders will say yes and non-profitable traders will say no. This is an important art. It's something that is really important to you. Before we get to Lloyd, and later on, we're going to have a little prize draw. We're going to give away a winner today. A winner from inside the room today is going to get a half-hour one-to-one coaching with me. Rightio, let me bring up some charts and have a chat. I've got a couple of things I want to talk about today. And look, many of you know that I'm doing a market analysis section with the economic calendar. Most days around 11 a.m. Central, that's a little bit earlier. I just want to have a bit of a run through the market and talk about what we've been talking about. I really want to talk about some important things, some things that are going on here that I find fascinating. I hope you guys find fascinating as well. Look, we talked about Bitcoin last Monday. We said that this looked like a bar that was setting up a range, and as long as price stayed in this bar, I wouldn't be trend trading it. But you could look for a break in either direction. If we got the break down, we'd come back and retest the triangle. If we got the break up past the high of this bar here, when that happened, that we would test this level and then this level. Now, I didn't know it was going to keep on going. Shukri would be a happy man. 12,963. Boy, that's bounced off 13,000. Shukri will be a happy man next time I see him. That will definitely be his round. Gosh, I feel a bit scruffy just almost over the camera. Sorry, guys. I think this thing about identifying bars that take you into ranges and what to do when they break out, I think it's really important. I think it's a little bit underdone in trading generally. NASDAQ, we saw this big step up and this gradual move down. Not quite an inside bar, but the kind of bar I talk about for inside bar reversals. Move back down, got us to the bottom of the bar, and then this bar sets up the range here. And we're now sitting inside this bar here and going sideways. And same thing applies for me, really. Look, we've got the US election only a couple of weeks away. We've got some weird stuff going on in the world at the moment. Even the tech companies here taking a bit of a break. And look, what I would like as a trader is for this to put in higher low, higher high, and I'm happy as can be. I've got move up, move down, high, high, higher low, and I'm on my way again. Or to pull up to here and put in a lower high and a lower low and pull back and give me a crack. Got a few chats coming in. I'm just going to check if people are just saying hi. Hey, Helen. Hey, Juan. Juan, I'm sure he is. Brilliant. But right now, I have to sit this down. I have to sit this down until we break the body of this candle here. When we break the body of this candle here, I'll be a bit interested until then. I mean, look, this is pretty. I'm not sure if it's quite, but this is nearly bar, inside bar, inside bar, inside bar. This one's not, they're not quite, but boy, they're close. This is a market that's doing nothing, and for mine just needs to be ignored. The S&P 500 gave us a loser on the third Monday of the month. But the same thing applies now. You know, we've seen this move up, this move down, this big extended bar, and we're sitting inside the body. And as long as it's sitting inside the range of this bar, as long as it's sitting inside the range, I'll be sitting and watching, and really it's the same thing as the NASDAQ. Get up here and give me a high, and I want to play. I really do. Get up here and give me a lower high, and I'll play short. But for now, tough and stuck. On gold, it's this bar here that set up this range some time ago. We've been sitting inside it now for some time and continue to sit inside it. And again, I'm a big believer in these decisive bars at the front of ranges dominating markets. And I'll be sitting and waiting now for a breaker and a close below or a close above. Close below, look, the target to the low side, I think 1747. And the target to the high side is definitely back to the previous high. So we'll wait and see if it breaks out of the range and where it's going to go after that. Dollar yen. Wow, those who are in Julian's trade call group will be enjoying this. In fact, you guys have had another good month from what I understand. Interesting in this, and taking profit move, stop loss to entry on it. Gotta say, this bar here worries me. This is when I talk about inside bar reversals. This is what I'm talking about. And if this closes somewhere around here, then I think it's going back to the top of the bar. So we'll watch that with interest. Julian's still biased short on dollar yen, and he is the man. Oil, I think oil is driving Ping Ni. Ping Ni's next week's guest. But I think right now oil is driving Ping Ni crazy. Look at this range. How do you make any money trade? That's a daily chart. Price of oil in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So 3 weeks, the range. From about 41 to about 39, $2.17. Hard to make money on that kind of range on oil. Euro dollar, interesting. Look, it's an interesting pair for mine. I do like it, and again, I really would have loved it when it put in this lower high, to come down and put in a lower low, retested the range and got going, but it hasn't done that. It's popped back into the range, and right now the opposite applies. Here's a low, here's a high. Here's a higher low, here's a higher high, pull back to a higher low, get to the top of the range. I think that is the play on euro right now for me, technically. So that's me on market overview and what I see in the markets at the moment. Look, I'm a bit mixed on it. I feel as if this run into the US election could see some pretty weird stuff. After all, let's be honest, the run into the US election seeing some pretty weird stuff in the election. So never mind the markets around it. I've got to say that, I think Donald Trump's been good for the US economy. It's just he's a difficult man to like, particularly if you're someone who's got some broader views on the world. It's hard to like the man. And personally, I hope that he is heading for electoral defeat, and we may see the US go back to being a country that can stand up as an example of democracy instead of be a little bit of an embarrassment. Not trying to get into the politics, not trying to jump into that stuff. Well, I think Helen's saying it's good for Wall Street. I think anyone that provides stimulus is good for Wall Street. The Americans still fighting about that stuff, and really what you do want is, look, it's a weird thing to say, but what a terrible system where the president, the Senate, and the other Congress, they're not all lined up. They can't get anything done, and they just seem to spend their entire time not being able to get anything done. I don't think it matters who the president is. When you've got a guy like Obama who was all about bringing people together and working together, and he still can't get anything done, you've got to wonder about that system long term, how good it is. Please, Americans, don't hate me. I don't hate you. I'm just giving an opinion on the whole thing, But what we're here for today is we are here to have Lloyd come along and talk to us about backtesting. Lloyd, you in the room?
Hi, Paul. Yep, I'm around.
G'day, mate. How are things?
So far, it's been. I think this is going to end up to be a good week for me. So all in all, it's going to be making up some of the, I would say, unhappiness, negativity that I had from last week. So
fair enough, mate. Are you trading Forex, or are you trading mainly stocks at the moment?
Forex. Stocks. I'm just. I think the only stocks. No, sorry. The recent entry that I had made in stocks is more of the something which I shared during your Sunday show, which is the volatility index. I mentioned something that you gained $5 during the month of October. Seems to be doing well.
Mate, it sounds okay. It really does. Mate, one of the things I really like about you, and I think that people don't understand this, right, Lloyd, is, we as a company, we tell your story, and we tell, the story of people like Charlene and others, and about, when we met you, you were a videographer, and now you're a full-time trader investor. And honestly, I think people believe that means you sit on your bum all day and push a few buttons, but you actually do work close to full-time doing the prep to trade, right? Working on systems, doing back testing, coming up with concepts for new stuff, looking at indicators and re-optimizing those. This is not just for you, something you do in 15 minutes a day. This is something you do as a profession to make a living from, right?
Yeah, I mean, the way you put it is something. This is something which I didn't imagine myself doing when I joined your course, I think, a couple of years back. But well, fate point us to strange and wonderful direction. So I kind of enjoying doing what I'm doing at the moment, and yeah, coming up back testing, coming up with new systems, looking at the markets in a different way. So it has been a good journey.
Cool, mate. Look, it's one of the things. I love your story, and for those that come to the next trading retreat, I'm sure we'll have a chance to have you share your story again. But for now, I'm really keen. And look, I've got to say this. I think sometimes people don't believe this, but I'm really looking forward to it. I'm really looking forward to seeing what you do, because part of this stuff is that inside the group, there's shared knowledge about how we do this stuff, but it's not. I haven't sat down and taught you how to backtest, right? This is something you've developed yourself, and I'm really looking forward, because I know you're a clever guy. I'm really looking forward to seeing what you've developed and your tools for doing this.
Thank you, Paul. I think, incidentally, you might be the one that put me on this journey. I think it was during one of the one-on-one session that I had with you, again, quite some time back. I think you asked me a simple question of, how can you help me to gain more confidence in my trading? Yeah. So I think that kind of sparked off whatever I'm doing now.
I love when people tell me about those things. It's one of those things, Lloyd, where as a coach, you just do what you do, and people go, well, and I never really go and say to people, I don't really backtest. I don't say, hey, what made the difference? Because I really want, when I coach people, to be in the moment with them and trying to find the answer for them, and not having somebody else's old solution in mind. It's great that it helped, and maybe it's good for the next person, but really when you're coaching, you just got to stay in the moment and help the people you're helping. Mate, let's enough of this. Let's get on to back testing. Why do you ready to grab the screen? All
right, sure. Let me grab these screens.
Cheers, mate. Look, at the end of Lloyd's session, him and I'll have a bit of a talk about the session and back testing. After that, we will do a prize draw. Someone will win a half-hour one-to-one coaching session with me. We'll have to schedule that a little bit, guys. I'm traveling for the next few days again, and obviously I'm in a five-hour different time frame. But I'll do my best to book it in as quick as I can, and to give you whatever help I can for now on Forex trading and things financial, not on the systems of actions to wealth or online trading profits, but on the stuff that we use to help you guys make some money. People ask me, sorry, Lloyd, people ask me how and what the key is to building a good team. And honestly, the key to building a good team is to find some good people. Buddy, back to you.
All right, thank you, Paul. So I'm going to emphasize one thing today is that backtesting is actually quite a simple process. I mean, there's obviously simple and complicated stuff. So I'll just do it present it as simple as possible. We are going to actually backtest one strategy. I'm not going to tell you whether this strategy, am I trading or not? Is it functional or not? Is it profitable or not? This is something which I'll present today. And it is up to you guys who is on the stream to actually go and backtest it and see how it turns out. You may have some really interesting results at the end of the day. So, but whether is it I would say pleasant surprise, it is entirely in your hands. It's not in my hands. All right. So first thing, huge disclaimer. Backtesting will not work for every trader or every trading system. There are some systems which cannot be backtested. It can only be forward tested. It can be Greek system. Scalping is actually very, very hard to backtest. There's a lot of inaccuracies in the scalping system. But to me personally, and what I've witnessed so far is that within the ATW context, or even in my own investing friends, whenever I chat with them and ask them, does your system work? At the end of the day, they will always ask me, go and do your homework, backtest it yourself. Yeah, and those people have already succeeded way before me. Yeah, and that puts me in my journey. And as of now, I actually consider it vital in my learning process, my learning journey. And I think this is the one simplest step new trader can implement for them to become profitable. So in essence, what we're actually back testing achieve. Okay. Once you start back testing, it actually gives you ample practice because you are really going through past charts and just going to do F12, which is the forward button, and see what happens next. Yeah. And once you have done a certain amount of backtesting, it actually gives you confidence in what you're doing. When you first learn a strategy, it is just a strategy. It is nothing. But what goes on behind the strategy, the details of it, and how you gain confidence in trading it, back testing will help you achieve that. Unfortunately, I don't think forward testing will help you achieve that. That means forward testing means live trading it. Because forward testing, when you are testing something of the unknown, the thing is that you tend to put a lot of doubt in your thought process. That will strip away your confidence. Yeah. And then of course, backtesting will give you a better understanding of a strategy. And more importantly, I think for new traders is you tend to develop the eyes for what to avoid, even when all systems give the green light. Yeah, this is something that a lot of new traders tend to avoid asking or don't know. Yeah, because sometimes the charts already give you a hint when not to take a trade. Yeah, these are things that we have to develop an eye for. Yeah, and then understand the limit of the system. It isn't usually people will start to learn from with a trend trading approach. Can be a range trading approach, but whichever it is, the thing is that you have to understand there's a limit to what the system can achieve. Yeah. For range trading method, for example, usually people don't aim for more than 5:1 if you are trading within the range. Yeah. If within the range, whatever you trade, at most it gives you 3:1, but you consistently aim for 5:1 returns, then no matter how good that strategy is, but due to your approach, you're just not going to achieve anything. And ultimately, through backtesting, we are really training our eyes to familiarize what our trading system is trying to tell us. And in the long run, you should be able to trade without any indicators because the trading system has already drilled into your brain what to look for. So one thing that when I start backtesting, I make some mistakes. First thing is curve fitting. Yeah, so like let's say for example, I tend to tune some parameters to make the end result looks better. But what works with certain pairs, euro yen, might not work with gold or silver, simply because the commodities behave differently compared to currencies. Yeah, so I may have a 70% winning system for Forex or for certain pairs, euro yen, but it might not be the same for other pairs. And it might give me a false sense of security. Of course, that also led to over-optimizing of the system. To me, a systematic trading approach, your system should be robust enough to cater to most situations. Yeah. It might not be winning all the time, but at the least, it should not let you to be bankrupt at the end of the day. Then force your system to trade all conditions. Again, at this stage, I have not encountered any kind of trading approach that allows me to profit in all kinds of situations. Yeah, a trend trading is meant to be traded in a trend. Range trading is meant to be traded in a range. I think universally, that's it. End of story. Yeah, but what people sometimes start with backtesting is that they backtest the strategy throughout all kinds of conditions and expect the strategy to perform in all manners. It wouldn't work that way. Then the last two is psychological and the emotional condition of trader. This is what backtesting doesn't tell us at all. Case in point, actually this week I make a very simple mistake. I think some of you who watched the Tea and Hot Sauce with me and Orlando, I actually admitted on the spot that I took a silver trade on Tuesday. And due to what I know, silver trade actually on the H4 imprinted 2 rejection bar and I TP early. but after that, it went further in my direction. Yeah, my psychological condition for the particular trade wasn't that great. That's my mistake as a trader. And this is what backtesting will not tell me. The backtesting is very, very objective in its approach. So the last two, unfortunately, this is something that I think personally, I'm still working on it. And all the time, this is a constant battle. So in theory, if a system worked well in the past, it should and will continue to do so in the future. In theory. But who knows what will happen in the future? In theory, we will always work for the logical precedents, but then again, sometimes hiccups come in. All right. So I hope you all can take this screenshot. This is a simple approach that you can start off with. You have to understand yourself as a trader before you can start backtesting. Because once you start a journey of backtesting, you tend to see possibilities beyond your own ability of trading. Yeah. So you have to really understand yourself first. Yeah. If the particular system you are trading is meant for a day trading approach, keep it to that. Yeah. Don't entertain the thought of, oh, if I let this trade run for 2 weeks, I'll get into more profits. It won't happen. Because psychologically, if you have trained yourself to be a day trader, you open a trade within Monday, close the trade by the end of the day. That's how you have trained yourself. For suddenly asking you to become a swing trader, that means letting the trade run for several days, it's not going to happen in real life. For that transition to happen, it's probably going to take you for 6 months to 1 year at least to make that kind of transition. A systematic trading approach won't magically force you into that state of mentality. Then win rate. I can teach you a system which is profitable 20% of the time, and in that 20% of the time, it will give me 10:1 winner. But humanely, is it tradable? I don't think so. To have 80% losing most of the time and to hope for 20% win, I think that's very, very hard to achieve. Psychologically, we are just not trained to take that many losses. But is it a profitable system at the end of the day? It is. Just that we as traders, we cannot take it. So you have to know what's your preferred win rate. For me, my threshold is about 30%, 35. Yeah. So that's why my system, anything above 35, 40, 50, I consider it to be a good system. But that's me only. For you, maybe a different number. Your preferred reward. Usually, personally, I aim for 2R, 3R. This is actually inversely correlated. At this stage, for my own testing, I have not encountered any system which I have at hand that gives me a 70% win rate with a 5R reward. I think if I have that system, if I go to any bank, they might pay me handsomely for that particular system. So frequently for new traders, they tend to be very, very, how do I put it? Optimistic. Yeah, they want these two together, 70% and 5R. No. I think if you're going for 40, you can possibly have 5R, but if you're going for 70%, your reward should be around 1R. But then again, this is not something that I'm telling you what you should aim for. This is something, this is a chart that before you start with any trading, you should circle out the parameters first. If it's a day trading system, eventually you need to realize which session does it actually perform better in. And for your entry, whether it's the indicator, price actions, then the subcategory will be whether it's a breakout kind or retracement. Your exit, if it's according to risk to reward, or is it according to horizontal level, which is in a way subjective. All of us draw our horizontal level slightly different. Of course, there are indicators that does that, or you're using whole numbers as a horizontal level, then that will be objective. Indicator will be an objective approach. Price action, slightly subjective. Yeah, so you have to know all this. Don't change any of the parameter in the middle of your testing. You're just going to mess up all the results. For those of you who are new to backtesting, I will advise you to avoid multi-time frame backtesting method. What is multi-time frame? That means I'm looking at the daily chart and determined is a long or short direction, then I'm going down to hourly. Yeah, you're just going to switch between your chart. It's going to be very, very messy. For a start, if you can, keep it to one single time frame. Sample of trades. Logically speaking, I think if you speak to anybody, they'll tell you that you need to have at least 100 entry for each instrument before you can determine whether the system is profitable or not. Don't go too far into that extent. Yeah, you need to know that backtesting has different processes. Yeah, so for a start, just to determine whether that system is tradable or not, you can have just as minimal as 20 entries for each instrument. Just to let you have an idea. Then as you fine-tune that system, then of course you need to increase that number. Okay. Number of charts. Are you backtesting 5 charts only, 10 charts, 15 charts, 20 charts? Of course, the number of charts that you are going to test across a range will take up more time. I'm going to recommend you 5 pairs at the end of the day, which 5 you can start off with. So for those of you who are already familiar with backtesting and you are familiar with the rules of it, especially your trading system, you can go for automated. That means you need to pay for someone to do. Yeah. So what's the advantage of it? Once you have a VPS, you can literally just put on the EA and then you do all the work. And one thing that I like about EA is that it doesn't have emotions. Unless you as a trader, you interfere with the EA. During the testing phase, no money involved, just need to spend money on electricity. The last one is eventually, if the system is profitable, then you can attempt to make more money out of it via copy trading. But for a start, I guess most of you will start with manual backtesting process. Yeah. And this is actually my preferred method. Or should I say, you should be doing a manual backtesting. And if it is profitable at this stage, then you can move on to automated. Because nothing beats manual backtesting, because you really get a feel of how the trading system works. Yeah, you get to observe how it performs. Anyone can do it as long as you have MT4. And it will simulate, I would say, at least 80% of the live trading mechanics. Yeah, not 100%, only up to 80%, yeah, which is good enough. Then there's always the cons of it. If you're going to pay for someone to do the EA, you need to somewhat verify or hope that the person has good trading, good what do you call it, skills in coding the algorithms. Because one mistake, you can possibly lose your entire account. One experience of mine is that I did up an EA before. I didn't really verify it to a huge extent. I put it in. Next morning, I woke up, I lost about 15% of my account. Yeah, because I failed to account for one of the trading conditions. Yeah, this is actually on my side, not on the programmer side. To know the trading exact parameters of the trading system. Okay, so one example, I'm going to ask all of you now. Okay, if you're going to trade on engulfing bar, if you're going to be it bullish engulfing or bearish engulfing bar, can any of you tell me what is the parameters of it? How are you going to tell the person who's going to code it you want to trade that engulfing bar? Simple English. How are you going to tell the person? Any of you able to do it? I mean, most of you are price action trader as much as I understand. So how are you going to tell the person that, hey, I'm going to trade this engulfing bar? You need to consider that where the price is open, where the price is closed, and by engulf, how much it should be engulfing the previous bar. Yeah. So these are things that you have to consider. Then of course, after all the work, there's no guarantee that it may work in live trading. You still have to be forward testing it. And ultimately, it may be automated, but it still needs to fit your personality. At the end of the day, all trading system needs to fit your personality. They are not magical tools. Okay. And one thing that most traders got for their, when they have their new EA and toy play with, again, they tend to curve fit. And this is actually one thing that most newbie falls prey to, because you look at screenshots of backtesting results and they say, oh, this looks great. We actually managed to make 15% a month. You can actually just Google it, profitable EA. Just look at their results. Most of it are actually curve fitted results. It is meant to work in that particular period, because in hindsight, the trader, the coder already knows that particular period is in what kind of condition. And they just make the parameters of the EA perform in that. But in actual testing, who knows what kind of condition the market will be in. Manual testing can be very, very time consuming. I'm doing almost every single day, enjoying it. It's just like full-time work. Same issue, no guarantee that will work in live trading, especially for day trading and scalping system. There are a lot of other variables that you have to be taken account of. The drawdowns, these are more psychological of the trader. Then you need to follow a set of rules during your testing. We're going to backtest something easy later. Okay, it does not take into account the trader's fear and greed. You can, and this is the one thing that happened to me, I can backtest all legit entries of the system. But thinking of hindsight, if 50% of all the entries happens during the time I'm sleeping, really, is that a tradable system to me? I mean, during testing, again, hey, it's actually, it is able to make 6% a month. But half the time, when the trade occurs, I'm actually sleeping. Then the system is actually useless to me. Right, so you can take a screenshot of this. This is a matrix, simple matrix that I come up with. Things that you have to take note when you're trading. So for start, just most people, you'll just look at it, how many wins and losses that the system can give you within a fixed time frame. Then after that, if you're happy with it, you have to take note of wins, losses, and how many trades, no trades. Yeah. So imagine if there's 100 setup, but out of the 100 setups, 60 trades are actually no trades. Then that system doesn't really look that promising. Depending on how you manage your risk, your trade management, do you have a break even? If you don't have, you can skip this step. The fourth, win, lose, no trade, break even, and time taken to execute the trades, the duration of it. And most importantly, when does a trade happen? Again, people on stream is that we are living in different time zones. So if most of the trade, and if you're manual trading, most of the trading time, it happens to me, let's say, between 5 to 8 a.m. and it's useless to me because I won't be able to wake up during that time. Or rather, I refuse to wake up at that time to trade. Yeah, so the time to execute when the trade will be executed is important. Possible loss. Yeah, so this is something which I learned during my backtesting, is that especially for day trading system, if a trade comes really close to your stop loss, but it's just only for 3 pips and then it reverses, is that a win or a loss? In actual fact, I don't know. It can be a loss due to spread. So that is what I will account for, possible loss. Yeah. So there's no fix. So once you have your win, lose, and then your third category, which is your possible loss, this is what I say that the margin of error. Yeah. So I have a 50% profitable system, but the margin of error is about 10%. That's actually quite huge already. So you want to keep the margin of error as small as possible. Within 5%, I think is acceptable. 10% is a bit huge. Then it rather skews the result already. So let's start with something easy. Yeah, I think at some point of your trading career, you might have heard there's actually a London brick strategy. So we're going for Asian consolidation. Simple rules first. We're going for a 2 risk reward ring. That means risk $10 to get $20. And then entry will be the break of consolidation during the Asian hours. So Asian consolidation and the break during the London trading hours. Then I'll be taking the entry, going for a 2-hour win. Just 3 rules. That's all. I'm going to start with Aussie Kiwi. At this stage, do you suspect any red? London break strategy, and I'm going for Aussie Kiwi. I don't know. Let's have a look. Oops.
No, I'm not sure you're supposed to be sharing what I can see. I'm not sure if other people can see the attendee list, but you got it. You got the share screening going. Brilliant, mate. Brilliant.
Yeah, just now I was actually switching screen. Got lost a bit. All right, so here we go. So I'm just going to backtest about 10 entries. I'm not going to go through about 100 entries. That will take too much time. So I have already in my screen. So this will be the Asian hours from 00 all the way to 7 hours from that. That means 12 p.m. Yeah, so this is my Asian hours, 5 a.m. to 12 p.m. After that, I'll be considering the London break. I know it's really simplified. I'm trying not to overcomplicate it. So once there's a break, regardless of the price action, I just go in for a 2-hour entry, 2-hour risk to rewards. So let's start from yesterday. Here we go. My stop loss is going to be at the top of the candle. So this will be a loss. Let's see price retrace. 1 loss. You can see that price broke, close above. This will be a loss, 2 lost. It didn't hit my 2R. Price break, stop loss above, 3rd loss. Same thing, 4th. 5th stop loss. No trade over here. 6th stop loss. 7th stop loss. 8th stop loss.
Does this system ever work, Lloyd?
I don't know. We'll find out soon. Break, 9 stop loss. And finally, this will be 1 winner. I think. Yes, 1 winner. 1 winner and 9 stop loss. Paul, what do you think of this approach?
Lloyd, I find it quite funny because I know that London Opens go on runs. So when you trade this kind of systems, you do tend to go on runs of winners and runs of losses. So I don't think 9 consecutive losses, if you test 100 trades, will be a big factor. And the thing that stands out for me, Lloyd, is that your winner, while it made 2R, it could have made 7 or 8 2R. What could that have made? Can you show us that winner?
This one will still be a maximum of 2R you will run into before it reverses.
I thought you had a winner. I must have got a different winner. Can you go back one trade to the one trade further along?
This one maximum will hit 10R if you really let it run all the way.
Okay. Yep. 10R. So interesting. I'd be a bit interested in the rules, Lloyd. If it's that's the one that interested me. I looked at that and went, oh yeah, that goes a long way. Yeah. So I always look at these things, Lloyd, again, and I think your stuff about curve fitting is really important, but there's always an outcome that you can make it work. I'd want to see another 90 of these before I made it. And one of the things about these, backtesting these doesn't take long. You can have the sessions automatically printed on your screens by MT4. I can't remember how to do that, but I'm sure it's just a right-click option. I'm just having a look as we speak. But I've got to say, if you ask me what I think about it, I like this stuff because if I now on a weekend, I would go and have a good look at this. And as you know, I've got an automation that trades reversion to the mean on the Aussie New Zealand. So breakouts on Aussie New Zealand are quite interesting to me because they balance that up. So You know, the results that you showed us were nasty bad, but I wouldn't be giving up on this. I'd be having another look at this before I gave up on it.
Okay. Why don't I show you another one? Let's
Okay.
see if we can actually fare better.
So are you saying I should have given up?
I would say that Aussie Kiwi giving up, I don't know. I mean, that's really to each individual.
Yeah.
Paul, you are an experienced trader, so you can probably deal with that kind of losses. But I think for a new trader, for 9 consecutive losses, it's going to really break their mind.
I think that's one of the things we were talking about, Lloyd, that 9 consecutive losses, if in my back testing I only had 3 consecutive losses, 9 consecutive losses has got me done. But if on my back tests I've had 10 consecutive losses and I've made money, then 9 consecutive losses don't phase me at all, because that's part of the system, right? But that's what you're doing, back testing knowledge you've got to push it back a long way and be a lot more, you've got to spend a bit of time on that stuff, right?
So thank you, Paul, for that. I think there's something to be learned there. I think Paul, you've just given us a nugget of it. So let's move on forward. London break strategy. As I name it, why not go for something that's related to, that's more active during the London session itself. I'm just going to change the currency pair to Euro Yen. Why Euro Yen? Look, to me, Aussie Kiwi, at first, when I approach it, these are what we know as Asian currency. Probably, I don't know, probably during the London and US session, it might not be that volatile to give me a movement. But if I'm going for Euro Yen, Yen is a safe haven currency which is traded across all 4 sessions. Euro is also one of the major currencies that will be actively trading during the London session and possibly US session. So this is the only variable we have changed this time around. So let's see what happens.
Oh, like that already. I'll have this one, thanks, Lloyd.
Sorry, Paul?
I'll have this one. I've only seen part of the chart, but I like this one already.
All right, so this is the first trade. Start from yesterday again. Same parameters, Asian consolidations, London breakout. Breaks, my stop loss is above the candle, 1 win. Okay, I'm going for 2R risk to reward, same thing. Second win. Third, be very careful during your backtest, guys. A break is a break. Try not to justify it with, this is just a minor break. 2 pips break. Okay, be very objective in your approach. A break is a break. Simple as that. So, how many did I get? 1, 2, 3, 4th win. Because you can see that over here, let me blow it up. Price broke. It just shoot up. Immediately give me a 2R. 4th. This will be a stop loss. So 4 win, 1 stop loss. No trade. No trade. Stop loss. This will be a winner. 5 wins, 2 stop loss. 3 stop loss. 6 win. 7, no, this one will be nothing. Okay, so I'll hit my stop loss. So 6 win and 4 stop loss. So that will, if I go for a 2R risk to reward, sorry, Paul?
Mate, can I talk do you mind if I interrupt for a second here? I won't be long.
Yeah, please go ahead.
This is where testing is fascinating, right? So the first pair, Asian session, Asian currency, Asian country, Australia, New Zealand, part of the wider Asia, if you like, right? Second one, Asian currency versus European currency. And so does this range in Asia and break out in Europe? Whereas the Australian New Zealand banks are closed during Europe. They're unlikely to break out. They will do, but they'll break out less, because I find this stuff fascinating where you now take what you're doing and you turn it into why and see how you can build on it. I love this stuff. By the way, 6 winners and 4 losers, we can have that one, Lloyd. That one, we like that one.
This one actually sounds easier to digest.
Yes.
So 6 winners, 4 losers, 10 trades out of 10 trades, aiming for 2R. At the end of the day, I have an 8R positive win. Sounds not bad. So this is something that's only achievable during manual backtesting, that you will learn something as you go on and backtest. What if I put in a new rule? During the Asian consolidation, the consolidation need to be 35 pips or lesser. Does it change anything? So from the 6 wins to 4 losers, once I put in a new rule, does it really change anything? And then if I add in another rule, the final entry will actually be 6 hours after the London. After London Open, that means I don't really wish to spill into the US session. Again, does it change anything? And then for me personally, this is day trading. I need to, if I enter a trade, I need to exit before 12 a.m. If I put all these things step by step together, what do you think, guys? Does it really change anything? Let us go through one last round. So you can see over here, this is 229 pips. That means it's 22 pips. Still good with this. 33 pips, I'm still good with this. So both of these are still a winner. 25 pips, I'm still good with this. This is still a winner. 35 pips. So in fact, this won't be a trade to me already. I need to cancel this off because it's bigger than my stipulated range. 32 pips. This will still be this is a loser to me. Nothing, no trade, no difference, no difference. 34 pips, slightly lesser, but this will turns out to be a loser, no changes. 25 pips, okay, 4th winner, 2 losers. 25 pips, no matter what, I will still end up as a loser. Winner. 19 pips. So once I change those parameters, in fact, it actually didn't change anything for this strategy at first glance. Because I end up with, instead of 6 wins, I end up with only 5 wins. 1 win lesser. But is it true? What I can share with you is that I actually backtested a total of about 100 trades. Anything lesser than, or should be 35 pips, anything lesser than 35 pips, it actually improved my win rate about 10%. This is what I have learned through manual backtesting. And the reason why I exit before 12 a.m. is I think all day traders actually experience something called spread widening when the system changed at 5 a.m. I ever had a trade that I got stop loss, a couple of trades, I just got stop loss when it was in 5 or 6 pips away from my SL line, and I still got triggered. But eventually, it actually went my direction. It's quite frustrating. So this is something I think might give to you, something that if you're interested, go do your homework, might give you some pleasant surprise. In terms of backtesting, there are 4 charts I think you should know by heart. Please take a photo of this. First thing, requirements to break even for risk to reward ratio. Right? So if you risk once and you go for 3 rewards, $10 for $30, your win rate needs to be above 25%. That means if it's 26, you are considered a winner. I mean, that's a winning system. So 2:1, you need to be 33% above. Right, so on and so forth. The second chart. Now this is something which I realized quite late in my backtesting playground. Right. The thing is that when you're doing multi-charts, multi-instrument testing, there will come a day whereby you read it just dawns into you that, let's say you have a 60% winning strategy. That means there's a 96% chance that you have 3 successive losing trades for each instrument. So if you are trading 28 instruments, what are the odds that at that particular period you run into consecutive losing trades for a different pair? There's actually a pretty high chance. One losing trade for each instrument. If you are trading all 28, that means suddenly you got whacked with 28 losing trades altogether, and then you lose confidence with the system. This is something that you have to realize if you are trading multi-charts. But of course, as discretionary traders, you should be trained to eliminate the low probability charts. Again, another chart that most traders tend not to ignore is that if you have a drawdown of 10%, your recovery is actually 11.1%. It's not 10%. So this is more for people who trade dynamic lot sizing with percentages. And the last chart I'm going to share, if you lose, and I think this is something that Paul has drawn to us, is why we trade 1%, why we should be trading at 1% and not 2% or 3% or 5% or whatever percentage. Okay, so if you have 4 losers in a row, I think that's really common. 4 losers in a row, and you're trading at 3%, in essence, you're actually losing 11.5% at 3% per risk per trade. Compared to someone who trades 1%, if you have 4 consecutive losses, you're only losing 3.9%. So this is actually even worse for people who trade at 5%. Immediately you have nearly a 20% drawdown for just 4 losers in a row, which to me is actually quite common. Yeah. So another term for it is risk of ruin. So specific to day trading pitfalls is that it's very hard to determine whether the win or loss of the trade is due to news. Because one thing that I have learned at least is try not to trade during news time because it's really volatile. So during your back testing for day trading strategy, it's hard to determine. It's hard to determine the spread at a particular time. And this is something that which just now I described. If most of your winning trades occurs outside of your trading hours, that strategy may not be in fact tradable. The fourth point, this is something you've got to be very true to yourself. If a candle comes near to your stop loss, but eventually reversed, in actuality, it may be really stop loss due to spread. But in backtest, we did not account for that. That's why if you remember in my chart matrix just now, I put in the column possible loss. Right. So this is the last point is how to determine whether is there a possibility of spread widening, especially if you allow your trade to run to next day when the server changing time. So these are the 5 pairs which I recommend you to start off with back testing. Yeah, not all 28. Reason being that these 5 are not that positively correlated. Yeah. I wouldn't recommend you to backtest something that euro dollar, pound dollar, dollar CAD, all the majors together because they are all positively correlated to a certain extent. Yeah, you need to test something which is negatively correlated, somewhat correlated, the spread of different things around, so that you get somewhat of a better idea. Right, so this is a chart, 5-minute chart, which I just took off. It's today actually. So this is actually Aussie Kiwi from my 2 different brokers. Both are 5-minute charts. It's very different. So this is something which I wish to share. The last thing I wish to share is that, especially for day trading and scalping strategy, it can perform very, very differently from broker to broker because their liquidity fits are different. Simple as that. Right? So for a start, I would really emphasize you to trade end of day strategy. That means on the daily chart. Don't start off with a scalping strategy or a day trading strategy straight away. Yeah. The nature of Forex trading can perform, those strategies can perform very, very differently. Yeah. So whenever you switch broker, you actually need to rerun a back test of that particular strategy. So that's the end of my presentation. I hope you all can learn something out of it. Okay, so let me see if there's any questions. Okay. Can I show my Jury? Can I show my settings for my Fibonacci? Oh, those are actually risk to reward settings. Yeah, those are not actually Fibonacci settings.
Sorry, guys. Lloyd, I think one of the things that they're asking, and I think it's really fair, is that their fib tool is a 38.2 retracement, 61.8 retracement, 78.6, and 23. And yours is extensions, and I don't think they know how to put the extensions on.
Let me show.
I think that's what he would like you to do there. I've got a little bit of fun for later on. Soon, this session is live on YouTube, so everything that's live on YouTube is recorded on YouTube.
So this is setting for my fib levels. 0 is actually stop loss, 1 is actually entry, 2 is 1R, and then 3 so on and so forth. Yeah.
And to do that, you just literally just go up there. You can delete the current levels, and you click add, and you can add your levels on, right?
Yeah. So wherever there's a default one, you should delete everything and then start adding in from here.
Drew, I'll get a video on this done and added to the onto the graduates area for you as well in the future. The new graduates area where we must be about 2 weeks away. We're pretty close. A lot of video, huge amount of video been put in there recently. Let me just make a note and have that done.
Oh, actually, I did explain this how to do up this fib tool in the ADW educational video. They can find in the watch list.
Great. Lloyd, we'll run through a few more questions. I've got a little bit of a treat. There's some stuff I'd like to show them if I've got a bit of time. Just a little bit of new stuff that's come out. Wouldn't mind getting your thoughts on it too. You've seen some of the development of it. Cheers, Lloyd. Good job. Thanks, Dennis. Much appreciated. Did you get shorts on US 500? The answer to that, Helen, is that Fusion is good on that. Fusion capped their overnight spreads at 24 pips, and other brokers show a real spread. And the Fusion approach is pretty good for overnight spreads, if you ask me. Yes, please. I'm not quite sure what that was for, Fat, if you haven't answered. For a beginner, which pairs should we focus and time frame? Boy, that's a tough question. Lloyd, do you want to have a crack at that?
Yeah. So these are the 5 pairs which I'll recommend for you to backtest on. They are simply saying because they are not all positively correlated that much. Yeah. So it gives you a better picture of whether that strategy will work for different Forex pair. As for time frame, I would still recommend you to stick with daily and 4 hour. When you have more time, if you're going to become a full-time trader, then you can explore hourly and 30 minutes.
Yeah. Cheers, Lloyd. Sorry about that, Dennis. Someone's asked, what is the VPS that you mentioned in one of your slides? I'm just going to check on YouTube. I think maybe putting any questions in that you've got. But if there's any questions we have from them, we need to do as well. But Lloyd, we've got about 15 minutes before we need to start making way for Ash and Jeff. So I'm in no rush here. We can definitely spend some time and answer some questions.
Okay. VPS. Oh, VPS is something that virtual private server. If you're going to do full automated EA, you need to have VPS. Yeah, I don't recommend you to run it through your own computer or laptop because there's always the possibility of internet blackout or electricity short circuit. That stuff. Yeah. You can just Google Forex VPS.
Guys, just so you know, we don't do a huge amount of this. We've got a couple of guys. Many people have met them that do automated trading for us. We've got EA that runs full-time when I was in New Zealand. But I think that I pay for 5 VPSs at the moment for stuff that we do with copy trading for your accounts, different systems that we are testing in the background, back testing on Wave Rider, all this stuff all done on VPSs. So we don't do them on private computers, we do them all on VPSs with no downtime. So it's quite common for traders to have a number of VPSs as we go along. Who do you support in the football, Dennis?
Dennis?
Look, couple of questions in here that I would like to just get. I really like some clarity from Brian. Brian, for beginner, which pairs should we focus on time frame? Is that for back testing or trading? Because the answer for back testing was spot on. If it's for trading, I think it is a more complicated question. Can you have 2 fibos as an indicator? Well, Helen, I think you know that you know, it's not uncommon for guys to use a retracement of maybe 38.2 with a 61.8 stop loss. You can definitely do all this kind of stuff, and quite often fibs overlap from different cycles and create an area of support or resistance. But boy, yeah.
Actually, can I answer that for the FIBO tool?
Yeah.
So for the FIBO tool, this is something that you all can consider if you are using Fibonacci retracement tool. I mean, this the standard Fibonacci. So what you can do is actually you can from here just right click, customize, add in FIBO expansion. This is the FIBO expansion is the one that is being rarely used. I don't know if any other trader uses this tool. So once you have done that, it more or less is actually the same thing. It is a very complicated one. So let me try it again.
Where was that, mate? Fibonacci extension, it's on there. Oh, I like it. Yeah. It's hard to get used to using the fib extension tool as it always feels like you're dragging in the wrong direction, right?
Yeah, because FIBO extension, there are 3 points that needs to be configured. So it's a bit more complicated, but this is a possibility if you guys really want to try it.
Yeah.
Okay, so.
It must be an Aussie, Dennis. I've got some money on the storm for the weekend. Look, I've got a question here from Santa. Do we have approved tested automatic software in ATW? We have an automation trading course where the guys give you a robot to trade and teach you how to optimize it. We're in the middle of actually doing some work on some strategies for that with them at the moment. So we do have that. And we've also got some general data trade managers, which I'll go through for you as well. I hope we've answered that for you, Helen. Dennis, I think that's done. Brian, I think that's done. Guys, keep the questions running in. Cheers, KT. You're more than welcome. Now, mate, so in a few minutes, we're going to do a lucky draw, and someone's going to win half an hour of coaching with me. I'm keen to have a bit of a chat with you about back testing and just some general observations around it. And I'm also keen to show, I thought I might show the top secret, don't tell anyone, but I've got the next versions of the market scanner and the tester. And you've seen some of that stuff, Lloyd, and they haven't. So I thought I might give them a little peek at what's coming on that. I'll be sending that out to the team when I get back from holiday over the weekend. So, well, maybe before I go, if I can. It is 1 o'clock in the morning here. But one of the things for mine, it's a bit of a 2-step process, right? So I only enjoy back testing manually. Now, it's far more time consuming, but what you do is it sets off the ideas that build your strategy, right? So I love, and I love your color coding here too. I love going back and back testing stuff manually, right? But once I've got a concept, I get my guys to code it and I test it in detail there. I'll go back 100 trades on a couple of currency pairs manually, and I'm looking for what I think are the key drivers to make it work. And once I've done that, I'm prepared to get it to. But they say you can watch automatic systems back testing, and you can, but you learn nothing from it because this goes boom, 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 boom. But back testing manually, that's how I found that inside bar stuff, and I think it's my preference is to back test manually.
For most trader, manual backtesting is still, I would still say that that's the way to go for it, because that's the only way for them to learn the intricacies of the system itself. Yeah, really trading isn't really trading. Forex trading isn't something like do step 1, 2, 3, 4, 5, bam, that's the money. There's a lot more intricacies to be learned, to be observed of the markets.
You know, yeah, I really believe that. It's funny, works. I'm looking at this chart, and you know how I trade inside bars, and I'm looking at this chart thinking there's a few there that didn't work, but I'm just thinking, you know, if I OCO the inside bar, boy, it puts in some good results then. And this is what looking at charts can do. Look, one of the things that you need to be able to do, and it's really, it's, you know, it's one of these things. It sounds really easy, but it's really difficult. When you can just look at a chart without your own baggage about, you know, I did this and it did that, and something was unfair, and the world didn't help me, and blah, and you know, I was 7% up, and they split this, and they're done, whatever it is. When you can just put all that aside and just look at a chart, charts are fascinating, and you just look at them, you see amazing things. And I'm right at the moment. I'm really interested in a couple of different ways of trading, and I'm just spending some time looking at charts, and I just love it. I think you find, yeah, I'm a big fan. Dennis, I can't give you those numbers off the top of my head, but they're pretty good. Look, Chris, what I'm talking about inside bars, in truth, I quite like, well, I like inside bars, but I also like what would be the inside bar to pop out the top of the extended bar previous, as in the, I can't see the date, unfortunately, Lloyd, in the first light blue Lloyd's got here after the extended bar, that little dozy, I'd trade that back all day long. You know, I really like that thing where it's not quite an inside bar, but it just pops back, closes inside the body. I like it to close a little bit further down, but that's certainly something that I would definitely trade. There's a number of them all over here, which we'll talk more about inside bars as we go along. Lloyd, one of the great lessons for me about back testing was not to curve fit, and this is, you were talking earlier on about these systems online, right? Here's what I can promise you, right? You give me any system and any time frame, and I'll provide you a back test which looks amazing, right?
Mm-hmm.
I just fudge the numbers until it works, right? And a lot of these things that people show online as a record for their trading system is an optimized back test.
Yes.
And you know, honestly, if you can't make an optimized back test make money, you shouldn't even be playing with EAs, right? It's just so dishonest what they do. You need to be really careful buying those things or investing in those things, because they just don't trade live. And you know, there's a few of them out there that are just famous for making people broke. You know, be pretty careful of them. My advice to you.
Generally, I think that's a very good advice. I mean, most of the time, when you know how to read the strategy reports, it actually tells you a lot of information already. What happens is that I think most of the new traders, they tend to only look at percentage gain, and they get hooked up by it.
They just don't know what to look at, right? You know what you do want to look at is whether it's a trading record or an optimization. Honestly, you know, you can optimize anything to do anything. We recently back tested the wave rider and answered that question through about, I think it was 8 currency pairs, and I think all of them were profitable over 2 years. Generally somewhere around 5 to 10% for the year, I think, for each of the currency pairs. They're certainly making, again, this is where so when we robot trade them, Peter goes through and he optimizes every single currency pair, the moving averages, etc., for that pair individually. Now, size of bars, we do all of that stuff in the back test, and in the optimization to trade them automatically, and you can specifically trade every currency pair based on its record. And I can't do that manually. I can't teach you guys that, you know, on euro yen the trading gap is 2, on euro NZ the trading gap is 3. On Euro Oz, the gap's got down to 25, the bar's going to 25 pips. I can't do that. So what we do is we give you generic rules that work across the whole lot. And when we do this stuff and trade them with automation, we use the individual rules that benefit the individual currency pairs when we do it. And look, it's just part of education. if I gave you a different rule for every currency pair for every part of the wave strategy, you'd need a spreadsheet that you'd never quite get your head around. And, it just doesn't work for people coming into the market. Mates, in a minute, we're going to do a draw and do a little win. I'm going to show off. I'm going to jump into this as well. Actually, Lloyd, do you recommend any backtesting software?
Yeah, I can actually recommend one for back testing, not for EA, for manual back testing. I think that's SoftFX.
SoftFX. Can you type it into the chat for them, please? Lloyd, just click on all panelists and all attendees, and they'll all get it.
Okay, sure.
Cheers, man. I'm going to grab the screen off you for a second, Lloyd, and I am going to give you a sneak peek at this, guys. This is the next version. So this is Market Scan version 6. And please, guys, don't email the tech staff and ask when you can have one, because the answer is you can't have one. It's a beta test. I'm just showing you guys for the fun of it. But one of the things there's two things that are different about it that I really like. So here I am in Daily Wave Rider, and it tells me the risk reward to the nearest support or resistance for each one of these. And so this one's a bit limited as far as what's allowed on it. You guys can't quite see that, unfortunately. Here, it tells me the price action. This is an engulfing bar, an inside bar, an inside bar, a doji, an inside bar, a doji, an engulfing bar, low test bar, a doji, bouncing off weekly resistance 1, or weekly resistance 1, weekly support 1, right? And if there's more than 9 results, I can clip up and down and see them. It'll tell me again what every one of these is bouncing off. Now we'll ask Peter at some stage to see if he can group these so the support and resistance comes to top. So one column here is which price action it is. One column here is what support and resistance is, and one column here is what the risk reward is to the nearest support or resistance. One of the things I really like about it as a tool is that I can come down here and I can make the font smaller, or I can make the font bigger. How good is that, Lloyd? And obviously, with the new version of this, if I want to, I can bring that up over there. If I want to have a watch list and just scroll through the charts for the watch list, I can set them there. I think that here, it will now just take me through the ones on my watch list. If I want a new order, I can click there and do all of that stuff. If I want to hide it, I can just take it all off my screen. So I don't have the market scan showing it all, just the buttons across the bottom. So this is the new version. I'm not sure what I've got as far as question, but this is the new version of the trading software. And I'd expect to give that to you guys. It's going to the team for testing in the next few days. I'd expect to get it back to you guys. I think we'll probably have Peter on this show to launch in a couple of weeks. Is probably the way we'll do it. We might do it as part of the show on the 21st. He may launch one of the other ones. I don't think I want to show strategy tester at this point. That's one that we're using for some other stuff with Lloyd. I do have a trader's toolkit. And again, the trader's toolkit now. As the same.
Yes, that's a time to exit now.
What was that? Sorry, Lloyd?
I say you have another show coming up, right? So that's the time to exit now.
Oh, it's not quite time to exit because we haven't done a draw. We'll do a draw, eh? Mike, Can you run a draw for us, please? Mike, don't kick us out. I'm the boss. I get to stay another 5 minutes, right? We'll be out of here by 8:20 so they can get back at 8:30 to watch Ash and Jeff in the US session. Those boys are having some interesting stuff going on. They might talk. I'm not sure if they will or not, but they may well talk about it in there. So I would hang around for that if I could. Mike, can we have a draw and have a winner, please, for a half-hour one-to-one coaching with me? Unlikely to be live at this stage, likely to be online.
Okay, I'm just gonna grab the screen now.
Cheers, Mike. And look, to be in the draw, you've got to be in the Zoom. If you're on YouTube, we can't track you guys. So these are people who are attending today. We use first names only in the draw. No worries, Faz, enjoy. You do have to be in the show to win, so hang on a second, see if you can win. There we go. Let's see what happens here. Clickety click, click to spin. We're spinning it. And the winner is Paul. No, the winner is
Lloyd.
Look, I nearly was, Paul. That would have been funny. Looks like Raymond. We have a winner. Raymond, are you in the room? Is Ray in the room, please? You've got to be. If you're not in the room, we do another draw, Ray. I think Ray. Ray, can you reach out to us if you're in the room? I can see you in the room. You've actually got to say you're in the room. Cheers, mate. Raymond Lau, Maya will take down your name and details. We'll drag you out of the registration in the next couple of days, and James will reach out to you probably early next week. It is Thursday night in New Zealand. It's Friday morning in New Zealand, and I'm away tomorrow, and it's a public holiday on Monday, so I'm back on Tuesday. So we'll reach out to you early next week and organise a one-to-one coaching session with me. Look, I just want to say, Lloyd, I really appreciate it, and I think one of the things I love about our people is the just the openness to which they're prepared to share, and to go through and tell people, well, you give them a strategy. And look, if someone asks if we could go over that strategy again, look, please just go to YouTube and watch the video and see that strategy. We have now put that strategy on record. Everyone can see it. Have a bit of a look at that, and more importantly, see if you can work out how to make it better. Have a look back through some data and see what the levels are that make a difference, because I'll guarantee you he's got something tucked away that makes that strategy even better. Which currency pair? How big a range? Is 2-to-1 the optimum result on that? I had a funny feeling some of those, when they went a fair way. I'll be having a look at that. Anyway, guys, thanks for joining me tonight. Have a wonderful week, and enjoy your trade. Why can't new traders follow rules 100%? Because if they did, there'd be no need for us, Dennis. Cheers, everyone. Have a good night. Take care. Trade well. See you next week. Cheers, guys. See you.
Bye. Bye-bye.
Hey, thanks, Lloyd. It was amazing. I really do appreciate it. Thank you very much.
My pleasure.
Cheers.
Bye,
mate.
everyone.